Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Asian stocks gain, heading for their best week in more than a year as strong US retail and jobs data ease recession worries. Ukraine says it has accepted the surrender of the largest group of Russian soldiers since the start of the war as Kyiv continues its cross-border incursion. We bring you the details. Plus, Sweden records the first case of the new Mpox variant outside Africa. That's a day after the WHO declared a global health emergency. Good morning, happy Friday. It is risk on across these markets. Bonds are being sold off, equities are bid. Yes, the data scenario in the US pointing back to that Goldilocks prospect of a soft landing for the US economy on retail sales strength and slightly lower jobless claims. The futures then, in terms of the European setup, pointing higher by around 0.2%, looking to close out the week on positive territory for European stocks. The FTSE 100 here in the UK, currently just down 0.1%. There's softness coming through for the commodities markets. We'll unpack that story for you. 8,366 on the FTSE 100 futures. S&P futures pointing to modest gains, about 0.1% after rallying yesterday more than 1% on the S&P, more than 2.4% for the Nasdaq and the Russell 2000 as well, outperforming stateside. The Nasdaq futures currently pointing to further gains, building on the upside of yesterday, currently pointing higher by 0.2%. Let's flip the board and look cross-asset. The Japanese yen in focus. The weakness of recent days, of course, has been pretty pronounced for the Japanese currency. Right now, a little bit of strength coming through. Currently up 0.3% versus the US dollar at 148. The US 2-year back above 4%. We saw that selling pressure across treasuries. Markets repricing now around the Fed on that stronger US data, now expecting fewer than 100 basis points of cuts by the end of this year. And the sell-off in treasuries is there, currently at 4.06 at the front end. $80 a barrel on Brent, down 0.3%. The yellow metal currently at 2,453 on gold, a little softer by about 0.1% so far in the session. Let's cross over right now to Avril Hong, standing by in Singapore for a check on the Asian markets and what a strong few days it's been. What is standing out to you, Avril?
Well, it's what we're seeing in Japan. The equities there are really the ones that are outperforming. But overall, Asia stocks are doing pretty well, save for what we're seeing on the mainland today. Asia's stock benchmark is headed for its best week in more than a year. Of course, this is the tailwind we're getting from Wall Street and the US data. But also in Japan, note how we are headed for gains of 8% on the Nikkei. And this is a follow through from last week after BOJ's Uchida helped to smooth some of those market concerns of a further rate hike. Next week is one to watch. It might not be so straightforward, especially given how at the end of the week we are due for data out of Japan on inflation, and then BOJ's Ueda set to speak before Parliament. Still, we are seeing those strong gains. CSI 300, as I say, is flat, and this is following on from managing to clock gains a day ago despite poor July activity indicators showing lackluster economy. Hang Seng following through with what we're seeing around the rest of the region, but also given the weak data out of China just a day ago, or a mixed bag, I should say, we had a PBOC, report and actually an interview from Pang Gongsheng, and he talked about how they're pledging support for boosting of growth, but these measures are not going to be drastic. Flip the board and take a look at where we are on dollar yen as well, because we are seeing some traders dipping their toes back into the carry trade, that weakness returning, as you just alluded to a short while ago, Tom. But I also wanted to flag what we saw in the data overnight. Look at this pop. Just a reminder of how for dollar yen, the Fed moves are also really important. Flip the board again and take a look at this chart, which will show you how the Nikkei is looking at its best week since the early days of the pandemic, 2020. But putting this into context, this is after a 4-week sell-off. So it's really about flows and momentum. So give you a bit of perspective despite that rebound that we're seeing today and this week. Tom.
OK, Ava Hong with the context and the check on the Asian markets, joining us out of Singapore. Thank you, Ava. Now, those strong US retail and jobs data, of course, bolstering hopes of a continued soft landing in the US. That economic resilience also prompting traders to shred bets on big rate cuts. For more, let's bring in our MLive strategist, Mary Nicola. Mary, it was only just, a week and a half ago that there was talk of a US recession, concerns about a US recession, talk even of an emergency cut from this Federal Reserve. Wow, has that changed? The narrative right now, built on the data that seems to be aligning for a Goldilocks scenario for the US. Talk to us about the market reaction to this and whether or not this is a rational response to the data that we're seeing in the world's largest economy.
I mean, as you put it, it's just been what a response it's been and what a reaction it's been over the past week or so. And it really comes down to the fact that a lot of the concerns, especially with about the U.S. and a recession, has faded. And it has a large part to do with the most important part of the U.S. economy, and that's the consumer, is showing continued signs of resilience. And if that continues, then there is no reason for the Fed to panic or to have some sort of jumbo rate cut. That was unlikely to come unless we saw, let's say, a rapid deterioration in the job market, because it really does come down to the job market at this point. But when you're seeing that consumers are confident and are in a strong place, then it's hard to really gauge a big bet from the Fed. I think you still get to see easing in September, in line with what we've seen from global central banks, where they start easing, but then they take a more cautious approach thereafter.
OK, so that's on the US recession risks fading. Another part of the script that's being rewritten as we speak is the carry trade, which, of course, unwound, I should say, about a week and a half ago. Now it seems to be back in play on softer yen. The yen is a little stronger in the session today, but the carry trade, it seems, is back, at least to some extent, Mary. What do you make of this? What are the drivers for return of this carry trade?
Yeah, I think, I looked at I conducted an analysis of all the carry trades, the rallies and the sell-offs over the past 15 years. And what has consistently been the case is that when you see stronger equity markets, then you see a rebound of the carry trade and EM carry comes back into play. And I think you're seeing a similar repeat here today, where you're seeing equity markets come back, you're seeing equity markets stabilize, and that, of course, is helping fuel sentiment, improve sentiment. We've seen a collapse in the VIX and equity volatility. Obviously, that's also helping, but it really comes down to better risk sentiment overall, and that we're seeing in equity markets. And from the study we conducted, we also saw that the stability of the Chinese yuan is also a very important precursor for EM carry trades over the last 15 years. So we see those as the two most consistent things that work in favor of the carry. And obviously that's coming through today, bringing a lot of that talk of EM carry back.
OK, really fascinating in terms of the details around some of the fundamental supports to that carry trade as we see, as you say, it reviving, at least for now. MLive strategist Mary Nicola with the reaction there in the context around the US data front, as well as markets reposition and readjust around that data. Equities, again, bid in the session. Mary, thank you. Now, Sweden has reported a case of the new Mpox variant. We're shifting focus right now. The first recorded outside of Africa. Bloomberg healthcare reporter Janice Q, who's been following all of this in detail, joins me now for the latest. What more do we know then, Janice, about the case in Sweden?
We don't have a lot of information, or I don't have a lot of information, so maybe someone else does. But at the moment, we do know it was someone who came from the region. They don't seem severely ill. And the Swedish authorities called a press conference. They are certainly taking it seriously because this mutated strain is a more virulent strain, it is a more lethal strain. Marion Koopmans, who heads up the Department of Virus Science at Erasmus University Medical Center in the Netherlands, is a very experienced scientist, and she actually put out a X post saying that everyone can calm down a little bit. There have been Mpox cases every month in Europe. And it's definitely a different clade, but it's the same neglected problem. And I think what she's speaking to there is very much what the Africa CDC has been trying to bring attention to, that if we continue to neglect this problem in the areas where it's endemic, we do risk mutations, and we don't know exactly what we're working with when viruses are mutating.
Okay, so still a number of unknowns and the risks of those mutations. What do we know about the containment efforts at this point, and to what extent are officials and authorities looking back at the playbook of the COVID-19 pandemic for solutions to this?
I do think that there's, in some circles at least, there's an acknowledgement that the way we did things with COVID was not ideal. But I do think equally that everyone has learnt a lot from COVID. Just on the ground example, one of the problems in Africa that countries are facing, and is a global risk, is that effectively you've got a problem with getting vaccinations on the ground. And COVID certainly helps with ensuring that those systems are somewhat in place, and it should be easier this time around. So there are lessons learned. The World Health Organization are being, they're not, in the early days of COVID, for example, when asked whether this was airborne, they said no. And yet they had to backtrack on that. This week, when I asked that question on their press conference, they didn't say it was airborne, but they also didn't write it off completely. So there are lessons being learned, and unfortunately, we are seeing news this morning out of China that they're considering, I won't say closing borders, but they are certainly surveilling and more carefully if it's an inbound from the region, from Africa. The WHO and the Africa CDC have both been very clear that they do not think borders should be closed. At this stage, obviously, there is severe economic impacts.
OK, Bloomberg healthcare reporter Janice Q on how the response to the Mpox virus is evolving. Janice, thank you for the update. Coming up, Ukrainian troops continue to advance in Russian territory, with Kyiv said to have captured over 100 Russian soldiers in a single day. Details on that are next. Plus, later in the show, we're going to speak to the CEO and co-founder of Swedish fintech giant Klarna as the buy now, pay later startup makes a big move into retail banking. That conversation at 6:30 a.m. UK time. Welcome back. Ukrainian forces say they have accepted the surrender of the largest single group of Russian soldiers since the start of the war over 2 years ago. We're now joined by Bloomberg's Tony Halpin for the latest, as of course Kyiv Ukrainian forces push and continue to push into Russian territory. So we're entering the 11th day of this extraordinary operation, Tony. How do Ukraine and Russia view the situation on the ground right now? This event has kept many on tenterhooks and has taken, of course, the Russians by surprise. What's the latest?
Yes, Ukraine's top army chief told President Zelensky last night that they were setting up a command post in the town of Sudzha to maintain public order, as he put it, and to provide for the population. And that is an indication, I think, that Ukraine is planning a longer-term presence in this Russian territory. It's not just a single raid. And as you say, they're continuing to expand their hold on territory. Russia, of course, is facing the challenge of pushing them out. Russian officials, in fact, the defense minister held a meeting with top military officers yesterday, saying that he wanted defenses strengthened in the neighbouring Belgorod region as well, which was an indication that they fear an attack will take place there too. So there's every indication that Ukraine is planning a longer-term presence inside Russia, and the challenge for Russia, the longer this goes on, is to demonstrate to its population that it can restore order at its border.
Yeah, and that challenge for Russia and for Moscow continues, doesn't it? What about Ukraine's allies? Are they supportive of this, Tony? Is there anxiety in Western capitals as to the extent to which the military hardware supplied by the West is being used on Russian territory?
Yes, I mean, this has triggered a renewal of the debate about whether Ukraine can use long-range weapons against targets in Russia. They've been under some US and European restrictions on the use of those weapons. But clearly that debate now is intensifying because Ukraine is demonstrating that it can intervene into Russia, it can gain territory. Russia so far has not responded in the way that some of the European and US allies feared it would if that red line was crossed. And so now Ukraine is making the case that it needs these weapons to intensify its strategic gains there and to put pressure on Russia to come to the negotiating table eventually, because they will have territory now that they hold, and Russia will have territory in eastern Ukraine that perhaps the two sides can agree on a swap at some point. That's the logic in any case.
OK. Bloomberg's Tony Halpin on the latest in what is and remains a pretty extraordinary push into Russian territory by Ukrainian forces and the broader implications. Tony, thank you for the update. Let's switch focus right now, staying on geopolitics, but to the region of the Middle East, of course, where Gaza ceasefire talks are underway in Doha between Israel, Qatar, Egypt and the US in an effort to cool tensions in the region. For more, let's bring in Bloomberg's EMEA News Director, Ros Mattison, who, of course, has been following all of this with the team in terms of the details. Ros, the talks continue as we speak, it seems. Any updates in terms of possible progress?
Well, we're hearing there was maybe some small signs of progress yesterday. We hear, of course, reports also that Qatar, which does have a conduit to Hamas, may have been providing Hamas with updates through the day rather than waiting for the talks to end and then sending messages to Hamas. Because, of course, Hamas is not represented in person at the talks, which makes it a bit more complicated. It's unclear what, though, that progress might have been. And it's unclear, talks going on today. Does that mean they're so bogged down, they're pushing desperately to find a way through, or does it mean they see some glimmers of light here? Because we know there are some very significant sticking points to a ceasefire deal. Most fundamentally, the disagreement is what does that ceasefire actually meant to achieve beyond a pause in the fighting? Is it an end to the war, which is what Hamas is pushing for, or is it just a pause in the fighting before it can renew, which is what Israel wants? So we know there are fundamental sticking points. There are some reports of small signs of progress. The talks are going to go on today. After that, of course, again, Qatar will go back to Hamas with an update. The question is, even if they say they've reached a framework for a deal, they can't sign off on it there. They need Hamas to agree and then Israel to agree. And obviously the Israel delegation has to go back to Israel to present this, including to Benjamin Netanyahu, who doesn't seem that inclined really to get a truce. And so there are a lot of steps to walk here before we get anywhere near a ceasefire agreement being enacted.
Yeah, Netanyahu, of course, under pressure from his right-wing coalition partners as well, domestically. When it comes to the Bloomberg team, we've been quantifying the potential impact across Gaza and the potential rebuild if and when the conditions allow for that. How extensive would that project be? How much of a challenge would that be?
Well, that's right. That's our big take story for today. And it seems a bit odd to be talking about reconstruction when a war is going on, but those conversations are happening because the challenge is real. I mean, what we know is that there's 42 million tonnes of rubble in Gaza from this war already. Around 70% of housing has been damaged, hospitals and so on, most of it destroyed, a lot of people displaced. And, of course, the task of clearing that rubble, which is like enough dump trucks to run from New York to Singapore, extraordinary amount. That's complicated by what's in the rubble. I mean, you've got chemicals, you've got perhaps unexploded ordnance. So it's a big, big task to rebuild Gaza. But it's important to be thinking about that now. So our story looks at not just the challenge, but what are the conversations going on about how to start that even alongside a war continuing.
OK, Ros Mattison, thank you very much indeed for the update around the Middle East and, of course, that potential reconstruction challenge as well. Director and head of EMEA News for us. Coming up, we're going to look at some of the intense headwinds forcing wind turbine makers, we're shifting focus, to shift their strategies. There's been quite some convulsion within that sector. That is next. This is Bloomberg.
It doesn't make a sustainable business if you're selling with loss-making prices on your turbine. And I think that's maybe where there is a deviation. Some will probably have other means and other parts in part of their subsidies or whatever levels. We are listed, private company, we have to make money on it, and the price is there.
Okay, the Vestas chief executive on the challenge of competing with cheaper wind turbines from China. And as well as China, the sector has also been struggling with high inflation, supply chain issues, of course, and project delays as well. Here for a deep dive then into the wind turbine market and its challenges. Leo Wang, head of China research at Bloomberg NEF, with the expertise. Leo, wind turbine manufacturers, and they have faced consistent margin pressure. We hear this every time we speak to the CEO of a wind turbine maker, certainly here in Europe, and that's happened since the pandemic. That's been consistent. Are there any signs right now of a turnaround on the horizon when it comes to margins?
Yes, Tom. So finally, I think we can see some light at the end of the tunnel. Why? So this year, actually, some of the turbine makers are expecting to finish delivering most of their less profitable legacy orders by the end of this year. And for the newer contracts, now, if we're looking at the turbine prices, they have gone up over 30% compared with pre-pandemic levels. It is significant if we consider the fact that previously the turbine prices have been falling for almost a decade. And on top of that, raw material cost is stabilizing, order volume is on the rise, supply chain disruptions are easing. So we do have the key ingredients here for a certain level of margin recovery.
OK, that's interesting and obviously consequential for those players in the sector. Talk to us about how that feeds into the competitive landscape then globally, Leo, certainly with your touch on the Chinese market.
Sure. So the global competitive landscape is actually going through a very interesting shift. So European and the US manufacturers for a long time are known for their diverse and global market footprints. But now, two of the largest Western manufacturers, so we're talking about GE Vernova and Siemens Gamesa, are shifting focus of their onshore wind business to more established markets like Europe and the US. That's where they have high turbine selling prices, but also lower risks on project delivery. So this makes a whole lot of sense from an individual company's perspective. However, they may actually end up having highly overlapped market focus, which eventually can bring fierce competition that really impacts selling prices and the profitability.
And Leo, look, you mentioned that Western manufacturers are to some extent at least refocusing their footprints. How much of this is around concern about Chinese competition? How real is that threat?
Right. So the fact is that Chinese manufacturers historically mainly focus on their home market. But since 2020, the domestic fierce price competition has really created a lot of margin pressures for them and pushing them to increasingly target international markets. So now with the Western competitors cutting their footprints, this can actually open doors for Chinese companies. And Brazil is really a good example. That's where we have seen several Western manufacturers scale back activities. But China's top wind turbine maker, Goldwind, this year got its first overseas turbine factory, not by building it, but actually by taking it over from GE Vernova. And even in Europe, where we see markets have high entry barrier, Chinese manufacturer Mingyang is also looking to build an offshore wind factory in Italy to supply some of the most powerful wind turbines to a supersized 2.8 gigawatt floating wind project.
Leo, just briefly, how are Chinese turbine makers keeping the products so cheap?
Well, that's a question really needs a long answer. But to put it simply, basically there are a whole range of complex drivers behind that. So we have the phase out of subsidies really driving down the prices. We have the intense competition among over 10 manufacturers, massive really demand that it offers the economies of scale. And also we have the low cost supply chains and also rapidly rising turbine capacity, which really helps to reduce the turbine cost on a per megawatt basis.
All right. Brilliant. You packed it all in there, Leo. Thank you very much indeed with the deep dive research there in what is transpiring in the wind turbine space. Leo Wang, head of China research at Bloomberg NEF. You're going to get more details, of course, on the website and on the terminal. Stay with us. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Asian stocks gain, heading for their best week in more than a year as strong US retail and jobs data ease recession worries. Ukraine says it's accepted the surrender of the largest group of Russian soldiers since the start of the war. That's as Kyiv continues its cross-border incursion. We bring you the details. Plus, Swedish fintech Klarna pushes into retail banking as it gets ready for its IPO. We speak to the company's CEO in just a few minutes. Let's check in on the markets then. Risk on in the session. Happy Friday. After 6 straight days of gains for the S&P, European futures pointing higher by 0.2%. Here in the UK, the FTSE 100 is flat. S&P futures pointing to gains of 10 points. NASDAQ futures looking to gains of 0.3%. Let's flip the board and look cross-asset. The Japanese yen in focus for us. And, of course, the sell-off in US Treasuries. At the front end, you're at 4% on the US 2-year. The Japanese yen slightly stronger in the session today after a few days of weakness, up 0.2%. Brent at $80 a barrel, and gold down 0.1%. Let's get to the corporate story around the fintech space and the Swedish buy now, pay later firm Klarna pushing, really interestingly, into retail banking by rolling out digital accounts in the US and much of Europe. It's happening, of course, as the firm prepares for an IPO, potentially in the US. Klarna's CEO and co-founder Sebastian Siemiatkowski joins me now from Stockholm for the latest. Sebastian, thank you for taking the time. Talk to us about what this push then into retail banking says about your ambitions, Klarna's ambitions to push further into this space, what it could mean as well for the top line in terms of revenues.
I think, the banking industry is so interesting because it's one of the probably least competitive around. High barriers of entry, low, you have to be a big volume cost company to be able to operate, and there's a lot of regulations and stuff. So, but ever since 2015, we said that the future of financial services will be a digital AI-powered financial assistant that really works on behalf of the customer, analyzes your spending and say, hey, you're overpaying on the mortgage. Let me renegotiate that for you. Let me fix, let me make sure to save you time and money. And ever since that's been the direction of the company. And I think now this for us is one of those huge steps when we're now starting to offer deposits accounts or positive balances accounts across both Europe and the US, which is also unheard of, right? Because banks usually would go like one market at a time, and we're launching it in over 10 markets at the same point of time. So it's super exciting for us, and it's very important as Klarna is both about credit payments and debit payments where you pay the full amount immediately, which is already 30% of our $100 billion annual volume.
Yeah, so look, it is ambitious, as you say, and you're taking on the likes of JP Morgan, you're taking the likes of Citi and others. Do you have a sense, Sebastian, of how much market share you could carve out?
Well, I'm very, very convinced that's what's going to happen with technology here. We're going to see a disruption in the retail banking industry, and that out of that will emerge probably 3-4 large global retail bank players, which, very likely to me could be Klarna, could be Revolut, could be Nubank, could be a few of those who have already proven now that, we have 80 million users worldwide, right? Like acquiring 80 million users and then starting offering them more and more rich banking services is pretty unheard of. There are a few banks of that size, but we're obviously not yet serving them with a full offering yet. But as we do that, we think it's going to outcompete because the incumbents are simply poorer from a technology perspective and also much, much more cost, right? If you compare the cost at which we deliver these services to the big banks, there's a huge difference. So I think that this is just the beginning. And just like we've been talking about self-driving cars for many years, and now I actually went on a Waymo in San Francisco, it actually worked. I think this will eventually happen. It's just a matter of time.
Okay, and in terms of projections around top-line numbers, revenue streams, do you have some estimates? Do you have some kind of ballpark figures that you're looking at as you project out in terms of the potential value of this push?
For us, one of the biggest things with this for us is that our volumes are over $100 billion per year, but so far those money has instantly been pushed back to the bank of the customers, to the other networks like Visa and MasterCard. And with us having positive balances, this means that more of the money will stay within our network. More of those positive balances will build up in our network, and that's obviously going to have a dramatic impact on both our payments costs as well as our cost of funding. We have already offered very attractive deposits historically, but what's really cool about this positive balance account in Europe is we're going to offer up to 3.5% interest on that balance account, which I think most European consumers have not been spoiled with that kind of interest on their debit accounts.
Okay, so you've got that interest offering in Europe. You've got the banking license in Europe, of course. You don't have a banking license in the US yet. Are you making progress on that front? I know this is an ambition of yours. What is the time frame? Do you need to get that banking license before the IPO?
No, I don't think that's a prerequisite. I think, to some degree, our US success almost took a little bit by surprise, right? In 2019, our US business was non-existent. Today, it's the largest part of our business, both in revenue and number of customers. It's over 30 million. We're probably going to hit over $1 billion in revenue in the US pretty soon. So, and that has obviously made sure that we are doubling down our efforts to accelerate rolling out new services in the US as well. But especially when you talk about things like bank license, it does take some time, right? They took us a few years to get our European banking license. So we don't want to make the dependency on the IPO to that.
Okay, what are you seeing in terms of consumer behaviour in the US? Are you seeing any softness at all, Sebastian, or are they holding up in terms of that resilience? Are you seeing a change in consumer habits?
Yeah, I'm a little bit confused about the reports around that, because from my perspective, when we analyzed our numbers, and again, considering that we have over half of the top 100 US retailers that we work with, we do have quite interesting numbers to follow these things. But my impression was that Christmas was actually would have been a little bit softer than we saw about 9 months ago, but thanks to a lot of discounting, the volumes were pushed up, and that didn't really materialize. And now, as I'm hearing some of these retailers report softening numbers, we actually see the opposite. I've seen quite a good and strong, solid sales in the US. So not really something we have been able to observe.
Okay, on the IPO, Sebastian, how much enthusiasm have you seen for that IPO so far?
Well, we're very flattered by media attention to it, at least, since it seems to be written about quite a lot. But I think that,
I guess from investors. From investors. Yeah.
Yeah, I think that, from investors, obviously we had, 1 or 2 weeks ago, a pretty, dramatic event in the stock market, right? So that, you can kind of see, I think before that, there was more of an acceptance. We're going to go into a period of time where, IPOs are going to start happening again. There's going to be more interest in these. But in our opinion, I think that what people really appreciate mostly about Klarna is that 2 years ago, this business was, very much attractive, growing fast in the US, but also loss-making. And in just 2 years, we have increased revenue by 50%, we have increased gross profit by 100%, and we reduced cost in 30%, which means that now we are, profitable. And I think those kind of financial performance obviously do raise the eyebrows a little bit with investors. Also, as we have, due to AI, committed to continue shrinking the company. We've already gone from 4,500 to 3,500 in the last year, and we are committed to continuing on that path, not by layoffs, but simply by natural attrition rates.
You've been an early mover on Gen AI. You reached out to Sam Altman of ChatGPT, OpenAI, pretty early on in all of this. What's been one of the most surprising things that stood out to you as you've embedded some of this Gen AI across the business?
Yeah, I think that it is, to me, in a way, I would actually partially say that, I was even, kind of pulled into the hype a year ago, where a little bit again, self-driving cars, we used to read about them in the press every day, and then you would look out the window and where are they? It's not happening. And now it's actually happening. And I think that, to some degree, I was almost drawn into the hype a year ago as well. I was okay, in the year, the whole thing will already have totally dramatically change everything. And now you almost have the opposite. You hear people oh, we tried, it didn't give us the results and so forth. But internally, what I'm seeing at Klarna is that it is working. It's just, it will take a little bit further time before it will have the full implications. To us, we've already delivered some fantastic results, but we're super excited what's coming in the next 12 months.
Before we let you go, Sebastian, look, what do we win you back? You're going to list in the US. That's the suggestion. That's the expectation. What does Europe and the UK need to do? Is there anything they could do to win this listing?
Well, one thing that I have said to regulators in the Europe, because there's been so much discussion in Brussels as well, how do we create a competitive market? And I have suggested, and I actually got some positive from some of the foreign ministers. I was invited by all the finance ministers of EU, is that I think that if Europe will never agree on where should the big stock market be? Is it Paris? Is it Frankfurt? Is it whatever European country? So the only way to actually get this to work is if you would mandate all the stock exchanges in Europe so that any stock that gets listed in one is automatically traded in another. I think that could reach the critical mass to create an investor base that is, similar size to the one we see in the US, because that's really one of the biggest challenges when you make those comparisons. If a company like ours is already mostly US business from revenue size, it will have to be a similar size of investment base and stock market size to make it a relevant listing point.
Okay, look, Sebastian, really appreciate your time, as ever. Really important updates coming through from the business. Klarna CEO and co-founder Sebastian Siemiatkowski on the latest. Thank you, Sebastian, as that company, of course, prepares for that IPO, likely the summer of next year, is what we understand. Let's stay within the tech ecosystem. And Balderton Capital announcing $1.3 billion in new funds to back Europe's top entrepreneurs, supporting businesses from seed stage through to IPOs. For more, I'm very pleased to say I'm joined now by Suranga Chandratillake from Balderton Capital, of course, general partner. Suranga, thanks so much for taking the time bright and early this morning. What does this capital raise tell us about the appetite of investors to put capital to play within Europe's tech space after what's been something of a funding freeze in the last few years?
Yeah, no, it's been a really interesting fundraise process. It's actually the fastest one we've done in a very long time. And we raised, as you mentioned, two different funds. So an early stage fund for seed and Series A, but also a later stage fund for slightly larger companies. And what we found was that the majority of the capital came from existing investors. So about 80% of it did. And that means, again, that those existing investors who've been investors in venture capital now for at least one, or in many cases multiple fund cycles, still feel good about what they're doing. But what was fascinating for me was the remaining 20% or so that came from new investors. A big chunk of that came from the US. And we saw multiple large US investors, including, for example, one public state pension fund who has invested in US venture firms before, but never before in a European one. And what they were telling us was really that they felt that the European ecosystem has got to the point now where it is seen as just part and parcel of the global technology startup ecosystem, and they have to have exposure to it. And that's why they're investing through funds like ours.
Really interesting. Okay, really interesting in terms of the US capital that's coming to play and the fact that they're taking notice of the activity here in Europe. What are you looking at then in terms of deploying this capital? You have the two funds, early stage, growth stage. What kind of companies would fit the bill in terms of how you pull the trigger on this funding?
Yeah, so we're a generalist investor. So we've always invested in a very, very broad range of companies, everything from fintech companies. You were just talking to Klarna. For example, we were the earliest and still are the largest investor in Revolut. So businesses like that have always been very strong in a continent like Europe. We've also invested a lot in deep tech companies. So, for example, we were one of the early investors in Wave, which is Europe's best performing autonomous vehicle company, which raised $1 billion earlier this year, but also things like gaming businesses. So everything from software through to consumer businesses, we'll look at all those things. And the interesting thing about Europe is being made up of multiple countries, multiple cities, you actually find different specialisms in different areas all the time.
What are you looking at in terms of the generative AI stack, Suranga? Where within that stack is kind of drawing your attention? Are you concerned about the inability of some of this investment to be monetized around generative AI? How has your thinking evolved on that front?
Yeah, so I think if you look at generative AI and if you look at the fundamental foundation models themselves, the majority of those have been built in the US. We have a couple of exceptions here in Europe, but it feels as though the volume of capital required to build those really, really large building blocks that sit right at the bottom of this stack the capital required is likely to live in the US, primarily actually in the hands of some of the really big tech companies who are obviously generating huge amounts of profit and cash and can pour it into these things. I think as you move up that stack towards the applications, so the different types of software that actually use this technology to deliver various different features or functions, whether that's used by a consumer or in enterprise somewhere, that's where we see Europe playing quite strongly, and we've made a number of investments in that market. And I think that's where you're going to see the most value first get captured as well. So, it'll start with, I think, a little bit like we saw with Klarna, who you had on the show earlier today, using that technology internally to make processes more fast or more efficient, allow that to lead to sort of smaller workforces in certain departments. But then also, I think over time, we'll see it used genuinely for generative applications. So use for things like the creation of marketing content or images and so on. We see that, for example, with one of our portfolio companies, Photo Room, which is used by SMEs and even individual business owners who use it to tweak their photos, which means they can sell their products more effectively on platforms like Etsy and eBay and so on. And these are just tiny applications at this point, but they're growing extremely rapidly, which is what's exciting about that whole market.
Okay, really fascinating insights. Unfortunately, we've run short of time, but really appreciate your time this morning in terms of that raise coming through, of course, for Balderton and what it means for the European tech space. Suranga Chandratillake on the latest there, general partner at Balderton Capital, having raised, $1.3 billion US dollars to deploy across European tech. Coming up, Asian stocks rally after data eases US recession concerns. Markets are risk on. We're going to take a look at what to expect from markets ahead of that European Open then, and how investors are adjusting to what looks like a more benign picture when it comes to the health of the US economy. Stay with us. This is Bloomberg. Welcome back. Happy Friday. Now, Asian stocks are rallying after US data eased recession concerns. Treasuries fell as swaps showed reduced bets on aggressive Fed easing. Joining me now is Charlotte Mueller, Chief Economist at Swiss Re, for a take on how the data over this last week informs our views about the world's largest economy, but also get a take as well, we hope, on the UK and Europe as well. But let's start on the US, Charlotte, then. Softer CPI, the jobs claims coming in lower than expected, retail sales jumping 1%, the strength there in terms of the consumer in the US. The data seems to align to that Goldilocks view. Do you share that?
So we do share that the U.S. is certainly more resilient than maybe what markets were fearing a few weeks ago. Of course, there are still some risks on the horizon. So maybe just digging a bit deeper onto yesterday's data, retail sales, they surprised to the upside, both on the headline number, but also if you look at the control group, that was less positive, but still overall positive. And there, I think the key message is that the U.S. consumer is still spending. So they might be a bit more selective in terms of what they're willing to spend their money on, but they're still going out there and spending. Of course, the risks on the horizon to watch are pandemic savings. They are now largely gone. And wage growth is also cooling. So many Americans, they are maybe resorting more to credit cards or other loans to support consumption. So that might add some questions to the sustainability of consumer spending. But overall, we still believe the U.S. Economy is on resilient footing, and we have a 2.7% GDP growth forecast for this year.
2.7% GDP growth forecast for the US. If this US economy then, Charlotte, is more resilient to higher rates than many had expected, does that mean it's going to be less responsive to lower rates on the other side as the Fed moves to cut?
So certainly all these economic variables, they react to monetary policy with a lag. However, what I would say is if we look at inflation data, employment data, that also does come and react to monetary policy with a lag. So it is important that the Fed doesn't get behind the curve either when it comes to rate cuts. So we still expect the Fed to cut by 25 basis points in September. We think market reactions of pricing in, for example, 50 basis points cuts was a bit overdone a few weeks ago. But we do think that there are good reasons for the Fed to start easing gradually. However, given the lagging nature of also employment data and also inflation data, we are potentially closer to recession risks than before. So we do think the balance of risks around our forecast are skewed to potentially 3 rate cuts instead of 2 for this year.
On the BOE, Charlotte, the markets are expecting the Bank of England to hold off on its next cut until November. Are the markets right to make that estimation?
So we would agree there also. So if we look at the inflation data, we also had that out in the UK this week, and headline inflation that rose slightly, but that was largely expected due to energy base effects. But the big positive was that services inflation did ease. However, if you look a bit under the hood, the reason of that was more due to the volatile components of the services categories, namely accommodation or hotels. which did ease quite a bit. But if you want the BOE to be more confident that inflation is coming down on a more sustained basis, you will need to see also the more underlying services, other components also easing. So as a result, we think that the Bank of England will hold off to cut again in September and rather wait until November. What would change that view? That would be if, for example, we did get a very disappointing inflation print, which is out right before the BOE meeting next month.
OK. Charlotte Mueller, thank you very much indeed. Chief Economist at Swiss Re on the view around the BOE, the focus on the lens on services in terms of how that informs the Bank of England. But they are right. The markets are right to be pricing in that next cut coming through from the BOE in November. The caution as well around the view on the Federal Reserve. They will cut, but they will take their time. 25 basis points is the expectation then coming through from the Chief Economist at Swiss Re when it comes to that September cut, fully expected by these markets. There's plenty more coming up. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, the strong data out of the US yesterday, retail sales growing 1%, beating the expectations, jobless claims coming in lower than expected, and of course, the previous print around CPI, inflation moderating more than expected. All of that coming together to form and reinforce the view that maybe we are in a Goldilocks scenario for this Federal Reserve. As a result, what you saw yesterday was a sell-off in the Treasury markets, the 2-year back above 4%, as markets now go from close to 4 cuts by the end of this year to closer to 3 right now. So reducing the number of cuts they expect to see from this Federal Reserve. And this is the terminal chart that shows and illustrates what's been going in the last few days. September is the white bar, November and then December, November blue, December yellow. And you've seen that restriction then from 100 basis points to just fewer if you combine all of them. September still firmly in play. Let's flip the board and have a look on how this is all playing in, because the yen carry trade is back. That is the take from Nomura and others, selling the yen to buy positions, for example, in the Nasdaq. The yen has been short, by the way. The yen is seeing a little bit of strength in the session today, but over the since August the 5th, it is down by about 5%. So softness in the yen coming through again. Of course, you've had these relatively dovish comments from the Bank of Japan officials, and that has been part of that factor. So the yen short positions building. Let's flip the board and have a look at how this correlates with the Nasdaq, because that correlation has been there. When you saw the sell off in the Nasdaq, you saw the strength in the yen and the sell-off of the Nasdaq. That correlation is back right now, selling the yen, buying the Nasdaq, buying those tech stocks. And we'll see if that continues, of course, because next week the BOJ governor will be giving testimony to the parliament in Japan. So that could be consequential. But the carry trade, at least parts of it,